joins us. Let's connect with him and let's understand that why he has not joined us in the studio. You're live. I want to know. We kept the studio ready for you. I'd order a cup of
I
coffee
know.
also.
Just that the night got a little longer.
That's why I ordered a coffee for you, my friend. I know where you were.
Don't worry, I've got mine. Thanks a lot. Really appreciate.
You missed the second part.
Sorry?
You missed the second part. I know what you did last night.
You don't want to know.
What's the right way of looking at this market? If I look at the market from the prism of Nifty,
Yeah.
it's dull, boring, lacks momentum. If I look at the market from the prism of Adani group of stocks, scary. If I look at the market from the prism of banking stocks, there is no problem.
Yeah. So Nikunj, we last spoke just before the budget. So I think the Nifty was 18.2 and things were good. It was seeming that we were just 3 to 4% from lifetime highs. Then just prior, I think 24, 25th, this whole Adani saga happened and the Nifty moved from 18.2 to something like 17,350. So it fell about 5%. But what the behavior of the market actually gives me a lot more confidence. See, you had the largest industrial group and stocks fell 50, 70%. However, the damage, and mind you, Adani Enterprises is a part of the Nifty, the damage on the market was just 5%. There would have been a lot more damage and a lot more collateral damage that could have happened. And markets have recovered. Today, what are we from 18,200, which I think is an important level, because if we surpass that, then we'll say that we have put this chapter behind us. We are about 3% from there. So I feel that it is showing immense maturity and immense depth. And remember that in this phase, if you look at the FIs selling, it has been massive. They have been really selling for the last whatever week or 10 days. And in spite of all that, you realize that what is the damage? And this damage also is being limited to a few stocks which belong to the family or the group. Beyond that, banking was one place which there could be collateral damage, but you'll find that even the bank nifty is about what, 3-4% from there. So I think that the good part is that this thing hasn't spread, it has been localized, and this particular group or sector is actually now accumulating very well. So beyond the point when the moment we have another headline, this would be forgotten. So all in all, I feel very, very positive about the market, continue to do so. And this incident, as I said, these are things nobody can predict, but the reaction of the market is where what is encouraging. What happened, what are the future, what are the, nobody knows, nobody has an answer to that. But the important part is that if there is news which the market is not prepared for, what is the reaction of the market? And I think the reaction of the market has been very good. Lot of sectors, lot of stocks still continue to make 52-week high lifetime highs while this whole thing is playing out. So the market breadth still remains good. The damage I don't think is much, and I feel that we will recover, and this will actually show resilience and the solidity of the bull market.
I just want to make this point for our viewers. Just imagine a situation where 5 years ago, if any would have told you the poster boy of the market, if that group had taken 50% knock, what will happen to the market? Everyone would have said markets would have also gone down by 30-40%. But the pivot group for this bull market has been Adani group of stocks. They are down 50% and the market is still holding on. That I think is the point which Atul is also trying to amplify, that the market is just not dependent on a group or a particular stock or a particular group of names. But Atul, markets are markets. When you see a fall as vicious as what we've seen in Adani group of stocks, what is the realistic way of looking at it? Because you understand trends and momentum and then you can connect it for us.
So for me, fortunately, we didn't have any exposure to Adani stocks, but banks and the few banks who've led to it, because that is where the whole, the chips would have fallen. And you realize that the good part is that they came out with very good numbers during that phase. But beyond that, you'll find that the recovery has been good. This thing has not become contagion. It has not spread. And then in this phase, the opportunity is that you have to see what stocks and sectors are doing well, even when this is happening. Like, there were still some banks that did very well. You'll find that some FMCG stocks continue to make new highs. Electrical equipments, capital goods I've been talking about, they continue to make highs. So even in the face of adversity, when there are stocks and sectors that continue to move up, and as I said, the sector where the contagion could be highest, which would be banking, has also held on very well. So this really gives me to understand that where the strength is in the market. First and foremost, we spoke about, I feel that the market has shown great strength and great character. And second is that even in that phase, there have been stocks and sectors that have made new highs. So in the face of said adversity, what you rightly said, Nikunj, that if this had happened 5, 10 years ago, when we didn't have these kind of domestic flows, the question was that, boss, will the market go in circuit? It was not just a stock. Those times things were different, and we know how it has happened. It happens at 9:16, and there's so much panic. There are no buyers on the other side. But now there is no such panic really, and in the face of panic, in fact, sectors and stocks are making new highs, and that ultimately are what is giving you a sign of where leadership is. And I think that's very, very positive.
Even that we spoke to you last, that was before the budget, before the Adani group of stocks route. Your Nifty target was 21500. Any reason for us to believe that you would like to revisit it today?
No, not really. See, and these are not, in fact, these make it much stronger. This makes the conviction stronger because, no, nothing moves linear in our market. Everything is zigzag. And every philosophy, every thought process, every theory gets tested. And of course, the theory gets tested. When the stocks are down circuit, you ask yourself, oh God, is it going to like spread? Is it going to topple the market? But the way the market has performed, the reaction that there is, and the breadth there is, in fact, makes me positive. And the biggest cause of positivism, which I shared the last time with you also, is the way global markets are performing. It's not just India. The kind of move that you are seeing in global markets is phenomenal. The breadth you're kind of seeing that is happening, the way European markets are performing. So this gives me a sense that this bull market is a global bull market in equities, and India, though in the short run may have underperformed, but I feel that when this kind of plays out, we will still be the best performing market or among the best performing markets. It's just that we have run up very fast. We broke out early. It's like a race. You break out early, you run early. You need to pause. You need to take some rest. In that, you also get tested with this whole Adani saga, and still you find that you're not tripping. You come back, and I feel that India will pull up in the short term. A lot of global markets were oversold. In fact, the most oversold spaces like China, etc., which people are talking about, they have been dogs of markets for the last 3 years, 5 years, 1 years. It's just that in the last 3 to 6 months, but that does not take away the belief or conviction in India.
Oh, well, yes, the investing in market is definitely not a sprint but a marathon, and that's what's happening with the Indian markets as well. But Atul, before the budget, when we spoke, you were quite bullish about the entire industrials and manufacturing theme. Post the budget, have there been any new pockets or areas that have emerged with respect to the fresh investments?
No, I think that a lot of these stocks, even in the phase post budget and this correction, have actually gone on and made new lifetime highs. And the numbers that have been coming out of them are spectacular. So you are really seeing that, as I said, that tough times don't last, but tough people do. And this was a case in point of some great companies, which I feel that where the trend is, I still reiterate, I feel electrical equipments, cap goods, etc., in the industry facing sectors look very good to me, and they have really held out very well in this fall. So I think it makes me a little more confident.
Just to take that point further, then those industry-facing, stocks and sectors that you're completely bullish on, what's the view on the entire capital goods space? Would it extend to, say, defense-related stocks, railway, or even those closer to real estate and infrastructure?
See, defense has been doing very well. In fact, if you see the last 1 year, barring PSU banks, we don't have a sectoral indices, but we've done some work. The sector that did the best was defense. In fact, defense stocks are going through a bit of a correction. But I think that again, it's a longer term theme that is going to play out. And I do think that, post a correction, you are going to see accumulation happening and they'll take off. I mean, not just that, you look at something like tire stocks, they are also doing very, very well. So there are a lot of pockets, hotel stocks, hospitality. So the breadth, it's not just linked to banking or it's just not linked to, one IT. The breadth, you look at banks, barring last week, they've done very well. Defense stocks have been doing well. Tire stocks have been doing well. Hotel stocks have been doing well. Selectively, FMCG stocks have done well. Fertilizers have done well. Cap goods have done well. So the breadth or the sectors, it's not that the market is being driven by any one sector. In fact, that always becomes a pain point, and that is what is good. This is also what you're seeing in the US. If you look at US markets, you'll find that the breadth is very good. The mid caps, small caps. So the breadth is we look at the tech spaces because obviously they are bubbly and they move up and down, so they become headline news. But a lot of these boring industrial plays also are doing very, very well, and they are, remember, participating in a up move after almost a decade of underperformance.
Atul, when typically you see a shakeout like what we've seen because of Adani group of stocks, it changes the market template, which is suddenly IT is outperforming. Suddenly you got outperformance in a stock like ITC and Britannia. So my limited point here, Atul, is that when you see a shakeout in a poster in a pivot stock or in poster boy group of stocks, the market uh, tends to revert. It changes the leadership. Do you see that happening?
No, I don't think so. If it had to happen, Nikunj, it would have happened. It would all happened in the last week or so. Now, in fact, the thing is that these stocks hopefully will move away from headlines. Yes, they will do their bit, they will move up and down. But beyond the point, I think they will settle at a level and they will move away from headlines. And then you and me will have other things to talk about. Like today, you're talking about Paytm and Zomato. So the headlines change and news change. And when there are new news or fresh news, the old news actually takes time to settle. So this is something where, of course, they've had pain. They will need time to repair, and I think with time they will repair. So rather than focus on them, what is the bottom? We were never in them, so fortunately. But the fact is that it will take time. There will be need for repair. But the beauty is that the headlines would move to other spaces, and you are a representative of that. What you talk about or what you look at market opening as actually decides headlines. So from that point of view, even your narrative, I realize, has changed this morning. And I think in the days or weeks to come, this will totally change. And that should be a good repair process here. It's good if it doesn't remain in headlines for too long.
Uh, Atul, at the beginning of the year, the underperforming trade was IT. Guess what? That has turned out to be the outperforming trade of this year. The outperforming trade of 2022 was PSU banks, and that has underperformed. If you believe that the leadership in the market will not change, can I safely say that Atul Suri is of the view that IT, in a sense, has peaked out after the dead cat bounce, and PSU banks are getting ready to come back on track and regain momentum?
No, I wouldn't put it in that way, Nikunj. No, I don't think so. I think even IT will have, if you look at some of the mid-cap IT stocks, they're doing so well. Some, I don't want to take names, but they're all breaking out. So that really tells me that there's a massive accumulation happening in IT. In fact, I feel that a lot of smart money is accumulating IT. And that could in fact be the next sectorial or thematic move. There is a possibility if your digital plays do some good numbers, or they handle their financials well, this could be a trade. So I don't think that IT is done and dusted with. I think that selectively, I think there's a lot of smart money that's moving into IT. PSU banks did well. They may require some time. They have run up very fast. So I think that the cyclical nature of the market. But the point to take away is that the breadth, whether it is stocks or whether it is sectors, where when the market is just let's assume only banks move, and banks, because of their weightage of the Nifty, can absolutely drive the Nifty, but where everything else doesn't do much, that is a dangerous scenario, because when that bubble pops, the whole market collapses. Now the beauty is that there is a lot of breadth, a lot of sectors. I just read out a few of them to you. So the beauty is that there are a lot of sectors that are participating, and this makes the market more solid. And this is what was demonstrated last week, that yes, the poster boy uh, theme, or you must say group, which was leading the market, popped. Yes. But what happened to the market? Nothing. There was no major damage really. That is because there's breadth. If the market was only being led by this industrial group, this group or this family, then there would have been a big problem in the market. So the breadth, the sectorial breadth, is very, very encouraging. And very often this takes time. This is the kind of base building process, and this actually leads to very, very good rallies later.
I I know that you don't have exposure to the new age tech companies, but I'm still tempted to ask you your view when it comes to all of these names. What will make you and convince you to probably take an exposure in Nykaa, Zomato, Paytms of the world?
See, I'm a trend follower, so I don't really try to predict the bottom. For me, what is very important is that these companies will have to first and foremost demonstrate profitability. And I know that I will not get the bottom, it may be too late. But very often catching the bottom can be very, very dangerous. Catching falling knives, it just is very, very painful. I'd rather be a little late, I'd rather be a follower than a predictor. So first and foremost is I need to see certain amount of profitability in these companies, and a couple of quarters, and post that also you will see in the price that they're making massive basic formations. They're very, very far from their 52-week lifetime highs, and then you will start seeing breakouts. So I would wait for these to be tested per se to be a part of a portfolio, because it's great for traders per se, but for an investor you need to see, Because once they do that, then you realize that these companies can have a very long runway. So I'd rather wait for that to happen. I'd rather wait for more consistent profitability to come in, and also to price to show the bottoming formations.
Group of stocks, and today there are two stocks which are almost off the circuit. One of them is actually Adani Green. Adani Green has seen a straight line fall. Let's look at Adani Green from 20th of Feb, 20th of Jan, I beg your pardon. It's been a straight line fall for Adani Green. From the lower circuit to the upper circuit, I think that's where that's the kind of reversal what we've seen in Adani Green. That's today's intraday graph. We'll measure the straight line for you. Yes, sir. It was a 3000, came down to 850. So it's been a more than 50% fall in Adani Green, but that stock is off circuit. Adani Port is up 8%. This is one stock where institutional coverage is there. Adani Enterprise still way below its offer price of 3200, nowhere close to its all-time high. But these are some of the stocks which, in a sense, are really, really reversing. Atul, for market to, or for Nifty to move to 21,500, it needs leadership. Reliance is rusty. HDFC Bank has been rusty. ICICI Bank is off from its recent high. So where will the leadership for the Nifty come from?
I think, Nikunj, this time what I feel is that the it's not going to be a single sector or theme, as I've been talking, that there is a breadth in the market. So the fact is that there are a lot of sectors like cap goods, and I've been harping about it. I'm sorry to again repeat it, but I feel that that could be a sector that could really do well. So everything may do a little bit. Maybe the big so-called marquee names may not. Of course, they have a weight on the index, but you may have a broadening or breadth of the market. You may have a lot of mid caps that will do well. So slowly they will push up, and I think that is a much more sustainable and healthier rally. And I've been making this point throughout this interview that the breadth is very impressive. Moving away from a few poster boys is always very good, because if a few poster boys are moving the market, there's always a big risk if they pop. So that really is my thing, that it's not going to be just these 3-4 marquee names. It is the market as a whole, sectors as a whole, which is really going to do well.
Also closely track the charts for what's happening, let's say, in the US markets as well as other dollar index, etc. Just wanted to get a perspective from the FII angle. Do you see that there could be a bigger rally in, let's say, the US stock indices, or let's say China and the other South Asian names?
See, one must remember that these markets are seeing what you called as an oversold bounce. Like China, people love to talk about it. It is just a lot of humbug talk. 6 months ago, nobody wanted to touch China. China was cheaper than it is today, right? Everyone had issues about a government which has haphazard COVID policies. You had businessmen being suddenly vanishing and things like that. There were corporate governance, all those things. And suddenly China seems to be the flavor. The world only chases momentum. The world chases price just because everyone wants returns. So the narrative changes very fast. India, which was a darling, suddenly has become expensive. And this thing can also change at a dime. So I think that, this whole China thing is good. You have to go and look at China 3 years, 5 years, and then see what India versus China stands out to be. It's just 3 months that people are getting, oh, so that India is a dump and China is the place to pick up. I think that's a very small way of looking, or splicing data in a very narrow segment. I think India is still the secular big bull market. In the US, a lot of repair happening. I think the S&P 500, etc., have all reversed their trends, and they have done very well in the last 3 to 4 months. In now, they may also take rest, because if you look at the last 2 days or so, you'll find that US bond yields have again started creeping above 3.5. You'll find that the US dollars also got stronger. So I think that global markets may pause a little bit, and India, I personally think, will continue to do its repair and move ahead. So this is just a short-term thing, it was like about the war, India is too expensive, and just dump India and go into China. These are just trading opportunities, and there are a lot of hedge fund guys which will do it. But if you look at the charts 1 year, 3 years down the line, you realize that, boss, we are a very far superior animal as far as the equity markets go.
All right, Atul Suri, appreciate your time. And I
Thank
certainly
you.
hope to
Thanks for having me.
see in the studio next time, and we're going to enjoy a cup of coffee. It's going to be cheers this time from me doing a cheers from studio, you from your office, but next time, let's do it in the office,
Sure.
or in our studio.
Cool. Yeah. Thanks, man.